Hi, welcome crypto traders. This is Stefan speaking. Today's lesson on price action series that we started last week is going to be trend. So if you followed last video, we talked about support resistance flips and then coming into trend and what trend is. And then throughout this video, we're going to go over some definitions, the basic structure of trend, and then we're going to give some tips on identifying it in the actual chart. Okay, so let's get started. So first of all, definitions, right? So there's two major trends. The first one we're going to talk about is an uptrend. You can call it terms such as bullish, call, buy, long, but the three basic stages of a trend on an uptrend is accumulation. And this is the first stage of an uptrend cycle, begins when buying pressure emerges and buyers create a strong level of support. And then the second phase is the advancing buying phase. The second stage of a bullish cycle begins when the resistance of an accumulation phase is broken and tested. Holding this level as a support confirms the buying phase. Traders love this phase as a new trend is formed, and the best strategy is to trade with trend. Finally, the third standard phase is the flare-out phase. This is the third and final stage of a bullish cycle or an uptrend. This phase occurs when the market is uptrending overall and all news is universally positive and there's little to no selling pressure. So these three standard forms of trend can be in any time frame. It can be in the 15-minute, even the 3-minute, the 1 hour, the 4 hour, the daily, the weekly, the monthly. Okay? So now we're going to talk about the downtrend. So you can call it bearish, put, sell, short. This is when the market is trending downwards. So the first stage of a downtrending market is the distribution. First stage of the bearish cycle begins when the sellers emerge and create a strong level of resistance. Declining phase and selling phase. So second stage of the bearish cycle begins when the support of the distribution phase is broken and tested as a resistance, signaling the selling phase. Some traders turn into investors, but the best trading strategy is to short the downtrend. So look how I said here, begins when the support of the distribution phase, talking about that support resistance flip from the first video that we had last week. Finally, the last session is a depression. This is the third and final stage of the downtrending market or bearish cycle. This stage occurs when the market is overall bearish and there's little to no buyers. Okay. So some characteristics of the first stages of accumulation and distribution. Stage one of both the bullish and bearish trends. Do not trade in the middle ranges of these. You want to trade the tops and the bottoms of the channel. Okay. So that means, when in that phase, once you can identify it as that, you want to try to stay out of the middle. So identify the high range and the low range and trade the tops and bottoms. In accumulations, you want to short the top of the range as the previous trend was bearish and attempt to accumulate a long position at the bottom of the range for a potential reversal for a long-term position. So in accumulations, you can still short. You just got to short the top of the range. And then you want to accumulate, and this is talking as an example more for a weekly, monthly, long-term position, accumulating for a long position, but it could also be on a lower time frame as well. And then the opposite is in distributions. So the first part of a selling phase, you want to scalp long the bottoms because the previous trend was bullish and short the tops for your long positions while still trading only the top and bottoms of the range and not trading the middle ranges. On a scalp play, taking profits at local swing highs and lows. It would be ideal to look for the greediest entry possible for your long-term positions and buy the blood and fear. Consecutive retests of levels lower the probability of the trade playing out. So if it tests that top range 1, 2, 3, then even 4 times, it lowers the chance that it's going to retest that high range, right? And then volatility is higher in a distribution phase than accumulation. So a lot of times in accumulation, you'll get a nice drawn out, depends on what type of time frame you're looking at, a nice drawn out time period, especially on a longer time frame, and you only get like one retest. Distributions, a lot of times you barely sometimes even get a one retest. It's on lower time frames when the retest happens, and you get a really huge sell-off at the top. But yeah, those are some characteristics of these two phases. Here is an example of accumulation. So this was in 2020 with the COVID dip in March. Bitcoin was down at 3,000 for a while and over a couple months, and then we finally got that retest, and then this is when the confirmed buying phase happened. This is more of a confirmed buying phase on a macro trend, because this is 14,000 here. So that's a big range. But you can, on lower time frames, you can have already confirmed buy signals and take trades down here. But this is just for the learning of accumulation. Okay. Consolidation zones. So consolidation zones occur between market movements. The most common places for these zones to occur is during the second phase of trends, the selling and advancing phases. A consolidation zone can be seen as the time periods of sideways price action or a pause in the overall trend. Supports and resistances are being tested and giving an opportunity for buyers or sellers to join in and trade with trend. A point of entry would be closest swing high or low to the established support or resistance within the consolidation zone. So, trying to get as close to that invalidation as possible on that established support or resistance, depending on the trend that you are trading with. So here is an example of some consolidations, and that exact example we were looking at earlier. And this is a lower time frame accumulation, confirmed buying phase. And then these are those consolidation zones, and then a flare out. So as we were talking about earlier, inside of that accumulation on a higher time frame, we had a full trend play out on a lower time frame. And that was kind of like a medium term time frame. So the 4 hour, the daily, 4 hour daily time frames, maybe even getting into the weekly a little bit. So some characteristics of the advancing and declining phases, which is phase 2. After accumulations, volatility is high and due to hope and feeling of missing out, FOMO. Higher highs and higher lows over time. Now, I don't think that you should be trading with emotions. With that being said, you have to realize what the market will be having, right? A lot of the market will be having FOMO there. Like higher highs, higher lows over time. Moving averages are angled upwards. Price consistently breaks above and closes above previous swing highs. After distribution, volatility is high due to panic and fear, with lower highs and lower lows over time. Moving averages are angled downward, and price breaks and closes beneath previous swing lows. Ideally, you want to trade with trend and avoid counter trend setups. Counter trend setups should only be scalps, ideally within consolidation zones. Keep an eye on key support areas and fib levels, which break and flip from resistance to supports, and vice versa for trade setups. All right, so the third and final phase is the flare out and depression phase. So after the buying phase, the flare out phase occurs. During this phase is when most new retail traders buy in and news is extremely positive. So a lot of times this is when, the new guys get in the final stage. It's unfortunate for them, but normally if they get out and they sell and they have, decent discipline, they could probably still make some money, especially if they put their stop loss at break even. When the flare out phase begins, it's best to start scaling out of longs and decreasing your risk and exposure. So taking profit, putting some stops in profit, etc., and so forth. After the selling phase, the depression phase occurs, and during this phase is when most retail traders cut their losses and the news is negative. So this is when the new guys say, forget it, I'm out. I don't want to buy, I don't want to hold this anymore. It's never going up, and they capitulate. When the depression phase occurs, it's best to start scaling out of your shorts and decreasing your risk and exposure. It's common for the depression phase to be the start of the upcoming accumulation phase, so scaling in at the bottoms and vice versa for the flare-out phase and scaling in short positions at the top, it's best to wait for confirmations of the starts of new dominant trend and enter on phase 1 of the respective trend. Okay, so here's an example of a distribution. Same example we were looking at earlier. So remember, in that large accumulation, we have a distribution, support, confirmation of selling phase, consolidation zones, and then depression phase. And then the depression phase became the start of the accumulation on the larger one. You see, this is what we were just looking at. There's the accumulation on the larger time frame. All right, so now what we're going to do is we're going to look at a live chart here, and I'm going to give you some tips, okay? So when we're looking at trends, what we want to establish is, one, what are the three time frames we're looking at? We want to look at a low time frame, a medium time frame, and a high time frame trend to see what trends we are. So this is just a tip that I am showing you guys. So we'd have a 3-minute, a 15-minute, a 4-hour, or yeah, a 4-hour, a daily, a weekly, and a monthly. There actually needs to be an hour here as well. All right, so now what we're going to do is we're going to look at the low time frames, 3-minute, 15-minute, 1 hour, the 1 hour, the 4-hour, and the daily for the medium time frame, and then the daily, the weekly, and the monthly for the high time frame. And this is how you can establish trends, right? So what we want to do is let's start off. Let's look at the low time frame. So then the 3-minute right now, we are uptrending, right? So then on the, going back to our little list here, we could put a little up arrow on the 3-minute. Now let's look at the 15-minute and the 1 hour. So on the 15-minute, we are uptrending as well. And then on the 1 hour, we are also uptrending. Okay? So now that we know that, we want to look for setups for that. Now we do want to look for characteristics of, is this potentially a distribution that's happening? Is this, and remember, we want to potentially trade, we just want to trade the top ranges and the bottom ranges, right? So that being said, in these consolidation zones, you take the top range, you take the bottom range, and these are the ranges that you want to trade, okay? But that being said, so since we know that we are in an uptrend, how would we trade this? Well, we want to look for short scalps down to here, and we want to look for long buys in this down range. And the long buys are potentially for continuation and breakout, whereas the shorts are for scalps, and we just want to take profit on the way down, right? So then now looking into like the 4-hour, and coming up back to this, we've realized that on the 15-minute, the 3-minute, and the 1 hour, we're all uptrending. On the 4-hour, we are also uptrending. So then now on the daily, zoom in. And I think on the daily, you can make an argument that we are uptrending now because we broke the low that created this, the high that created this lowest point here. So we could say that this is uptrending on the daily. So now we know even for medium time frame setups, so looking at, maybe a larger support, maybe for the 4-hour and the daily ranges, we could do this as our top range, right? And then this is our low range because this was a previous resistance that now turns support. So on like a medium time frame, look for something of this magnitude and then continuation to the upside, right? Whereas what we want to do is, remember, in these consolidation zones, we want to short scalp the top and then trade with trend on the way up. But now let's look at the weekly and the monthly. So now on the weekly, I personally would say that we are still in a, if we were going to look at it from a perspective of on the weekly, I would kind of put the arrow kind of like this. It's not really uptrend, it's not really downtrend yet. If we broke this, I would then have more of an argument to say that we are in a uptrend on the weekly, but we are kind of in a sideways aspect right now on the weekly. So we're kind of making like a weekly consolidation zone of sorts. And then on the monthly, we are definitely downtrending. So on the monthly, we know we're downtrending. So the question that you want to ask yourself is now in higher time frames, what type of trade should we still be looking for? Well, the dominant trend, which is the monthly, is still down. So we still want to be looking for downtrend setups. So here is, well, not necessarily downtrend setups, but like accumulation setups, right? So if this is the up high range and this is the low range, we want to look for longs here and shorts here for the higher time frames, and then obviously take profits on the way down. So this is just a tip or a trick to kind of establish, what type of trend that we are in, and it can help you in that aspect. Lastly, something I want you guys to think about is in these distribution areas or in these potential, accumulation areas that we looked at previously, what is going on here? So it's just the idea of like a tug of war, right? And you have buyers on this side, sellers on this side, and then there's a battle going on. So obviously buyers are winning here, winning, winning, winning. But what is happening here is they're taking profits, right? So when buyers take profits, what is that essentially doing? They're switching over to the selling side, right? And then when new sellers are coming in as well, then it causes that shift and switch. So it's just like, I think it's important to think of trading a little bit like PvP, so player versus player, between buyers and sellers, and what's really going on here for like just a deeper understanding of what's going on. So yeah, so that's like kind of the basics of trend. I hope you guys liked this. Please subscribe if you did, and comment with any questions or any concerns. Thanks for watching. See you guys later.